Hello and welcome. Do you have the advisor advantage? In this month's on-demand webinar, OJM Director of Wealth Advisors, Bob Peelman, outlines the 7 benefits your advisor should bring to your portfolio and your overall wealth management plan. It's important to note that this video is for informational purposes only, and the information may not be suitable for your personal circumstances. Please contact a professional before attempting to execute any of these strategies. If you find this information helpful, we would encourage you to check out one of our books. We'll discuss how you can get a free ebook download or hard copy of Wealth Management Made Simple or any of our other books.
Hi, my name is Bob Peelman. I'm the Director of Wealth Advisors here at OJM Group, and we'll begin with our first benefit, a portfolio that evolves with you. So what does that really mean? Some of the questions you may want to ask your advisor is, are they researching funds to identify the best options in each asset category? I think this is very important that a financial advisor is doing, or financial advisory team is doing due diligence on funds in every category, making sure that you're owning the best of breed, looking at fund manager tenure, looking at the fees associated with those funds, looking at the performance as it relates to benchmarks, and making sure that once you've identified the asset allocation that you're going to have, am I owning the right investments? Now that may be individual stocks, it may be individual bonds, but certainly if you're going to be using exchange traded funds and mutual funds, you want to be owning the best of each category. Is your advisor allocating assets for a custom designed portfolio? We feel that not every client should go into a model allocation where you're being put into a box of every client situation is not exactly the same. Everyone is unique. Their circumstances are unique. Their goals are unique. And so we want to make sure that the portfolio, while it has some common themes across asset allocation categories, that there might be some custom designs for you. It could be a particular individual stock that you own. It could be a particular tax-free municipal bond, depending on the state that you live in. So I think it's important to have an advisory team building that custom design portfolio for you. Assessing the portfolio for drift from some of the target allocations and rebalancing is a very important component about what an advisor does every day for their clients. You want to look at the percentages that are assigned to certain asset classes, whether it be U.S. stocks, international stocks, emerging market stocks, bonds, high yield bonds, alternative investments, whatever the category may be. Based on your risk tolerance, you may own 10% in one category or 12%. And you want to make sure that as the portfolio grows and changes, that if your percentages drift maybe to 15% or 16% in one of those categories, that you're having someone monitor that and make sure that you're rebalancing the portfolio as needed to get you back to your initial target allocations. It's an important component of portfolio management. The second benefit, a portfolio designed to match your risk tolerance, even if that were to change over time, and it certainly does for most clients. So some of the things your advisor should be doing is periodically calculating your current portfolio risk score versus your own risk score, identifying what is the risk makeup of your portfolio and how will it behave in different environments versus your family's risk tolerance for the markets, and making sure that those things are aligned. And that's something that should be done on an ongoing basis. Stress testing your current portfolio in a variety of market scenarios, both live market scenarios and back testing. I think this is an important component as well, because when we get into 2-week, 6-week, 8-week periods where the market sells off 8, 10, 12%, you want to know that your portfolio has been stress tested in environments just like that to make sure that your downside capture of the markets is what you're comfortable with. So you'll quickly see that if the S&P 500 is down 10% and your portfolio is down 9%, that might not be in your best interest. That might not be how you want your portfolio built. It might be, but you may be more comfortable having a downside capture of, say, 5%, 4%, 3% if the market's down 9 or 10. So stress testing that portfolio is very important. And then you want to make sure that your portfolio risk is coordinated to optimize asset allocation. So, in order to do that, you need to really make sure that your investment advisor understands the correlation between asset classes. How does emerging markets behave historically with U.S. markets? How do high yield bonds work with other floating rate instruments? This type of information is important because when you are in these different stress test market scenarios, you're going to have a good understanding of what your expected risk adjusted return will be, what your expected volatility metrics are in your portfolio, and you have a much more optimized asset allocation. The third benefit is portfolio management with an eye on taxes. This is often extremely overlooked by many investment advisors, and I think it's one of the most important components to helping clients reach their goals. You really want to make sure you're focusing in on taxes. And some of the things that we mean by that are allocate investments to optimize tax diversification. Are you owning the right types of investments in the right types of accounts, in the correct accounts? What we mean by that is for your tax deferred retirement accounts, you may have things in there that are paying income, high yielding investments, investments with a lot of turnover, so a lot of trading, different strategies. These are things that are protected from paying capital gains tax, paying ordinary income dividend tax on an annual basis. And so it's very important to own those types of investments in the right structure. Conversely, you want to own tax-free bonds or long-term growth investments that aren't paying dividends in a taxable account. This can really add to your after-tax returns. You want to make sure that the rebalancing strategy that we mentioned previously isn't happening in a vacuum, that you're coordinating these tax consequences and making sure that while it's important to get back to your target allocations, you want to keep an eye on taxes and make sure that you're not just simply automatically selling when it might not be the right time, say before 12 months, and you're paying now short-term capital gains rates versus long-term capital gains rates. These things are all important components that advisors are doing for their clients. Tax harvesting strategies, again, a very important component when you're rebalancing or you're making an investment change. Are there some embedded losses in a portfolio that you can sell to harvest those losses against future gains that you might anticipate? This is a great way to mitigate a lot of the tax burden you might have in a portfolio on an annual basis, and something that we do for our clients quite a bit. Recommend tax-efficient investments when applicable. Certainly that's important. You want to make sure you're owning the right types of investments in the right types of accounts. But certainly in those taxable accounts, if we can own things like exchange-traded funds or tax-free municipal bonds, that's going to only help drive performance. There's a variety of other strategies that we can talk about in more detail for taxes, whether it be backdoor Roth conversions that we help clients with, charitable contributions and donor-advised funds, and a variety of other strategies that we look at on an annual basis for our clients to help in the portfolios. Fourth benefit is private investment opportunities. So as your assets begin to grow, what we see in studies have proven this out with large endowments and foundations, that risk-adjusted performance can be improved with alternative investments. And there's a variety of different types of alternative investments, but you want an advisory team that's going to think beyond the standard stocks, bonds, and cash. Are there asset classes out there that can provide some value during a variety of different markets that fit your situation? So you want to make sure that, number one, the advisory team has the capabilities and the access to be able to implement these types of strategies, but certainly provide non-traded alternatives to your portfolio. Now, there's a broad menu of what this can include, everything from non-traded private real estate investments, private debt and credit opportunities, private equity opportunities are also available, long-short strategies. So there's a variety of things that we review for our clients to take a look at. But you want to make sure that your team is doing a exhaustive due diligence review of these managers, the investment strategies, having a compliance review before they approve these strategies within their investment committee and ultimately recommend them to you, the client. Our fifth benefit we're laying out today is having a comprehensive financial plan. So obviously portfolio management is very important, but it's certainly very important for the advisor to keep the big picture in focus. So you want to make sure we're constantly analyzing your cash flow, looking at future income projections and retirement goals. This is something that we do with our clients, sometimes as much as quarterly. Often it's an annual review of these cash flow and income projections, but in retirement goals, but something very important to make sure that the portfolio lines up with these goals. Discuss the variety of options that are available to fund retirement, everything from qualified plans to non-qualified plans, taxable accounts, IRAs, Roth IRAs, and education options, 529 plans, Coverdale education IRAs, should you own a Roth IRA for education purposes, all certainly things that we discuss and certainly your advisor should be discussing with you. Integrating your current asset and liability data for a complete financial snapshot. I think it's very important for your financial advisory team to have an understanding of not only the assets that they're managing for you, but your total balance sheet. Looking at everything from your practice, your business, personal properties, bank accounts, assets that aren't being held possibly with that advisor for their management, but certainly it helps them look at your total picture. And that's one of the things that's very important for us, and we have tools that allow us to do that for our clients. Periodically review and update your plans. Certainly plans are not static, they change. Everyone's lives change, life events, job changes, births of children, deaths in the family. So you want to make sure that your plan is being updated at a minimum annually. So that way your advisory team has a clear understanding of what it is your family wants to accomplish, and we're all on the same page. A clear understanding of how you are doing. Often I hear from clients who are at other advisory firms, and one of the things I hear is, I get this investment statement, and there's all these credits and debits, and did I make money? Did I lose money? How much is my capital? I think it's very important for a firm to lay out in a very transparent report. What's the summary of my portfolio? What's my performance net of fees? How much have I given you versus how much have I taken out? What is my investment gain? What is my contribution rates? So these are all things that we lay out in reports for clients and give access to via different technology vehicles, but certainly also in a hard copy. I think it's important to have something like this in a very transparent way, beyond your traditional investment statement. And finally, you want to make sure you have a total wealth management team and not simply a stockbroker or an investment advisor focused on one area. I think it's important to have experts in a variety of areas. It's really one of the core principles of our firm. You want to have something similar to our structure where we have a JD partner to provide asset protection analysis and recommendations, CPA partners to review your tax returns and suggest ways to reduce or defer tax liabilities. Insurance experts. Insurance products are very complex and they change very frequently. You want to have insurance experts to review your life, your disability, long-term care policies, property and casualty, and present these options that could reduce premiums and or improve coverage. So I think it's very important to have a holistic team looking at your overall financial plan and helping your family achieve their goals. Thanks for watching the video today. I hope it was helpful.
OJM is a multidisciplinary wealth management firm, and we work with over 1,000 clients throughout the country. We work in 3 different divisions for our clients: investment management, consulting, and insurance benefits. We would welcome the opportunity to speak with you about how we might be able to bring value to your wealth planning. As I mentioned at the beginning of the webinar, our principals have authored several books, all of which are available to webinar viewers at no charge. You can get a free hard copy or ebook download for Kindle or iPad by texting OJM Web to 555-888. You can also visit ojmbookstore.com and enter the code OJMWeb at checkout. In addition to a free book, OJM Group also offers webinar viewers a complimentary consultation where we can answer your questions and see if our firm might be a good fit for your situation. Visit ojmgroup.com or call 877-656-4362 to schedule your free consultation. Enjoy the free copies of our books, and we hope to have the opportunity to speak with you. Thanks for watching.